Welcome to TradeTheMBI.com. This is John. This report is for the 8th of March. Well, at least the record is clear. We knew exactly where things were headed, and we could see it breaking down once the magenta got below the 33. The white was leading, and it continued through the day. And it was interesting because we started off down nearly 100, rallied all the way back up, only to finish back down the same amount. And of course, we'd been talking about the contagion aspect of what was taking place from Ukraine, the miscalculations that were leading to the potential for major credit disruptions. And it just became more and more aggravated as the weekend was going on, from the cancellation of every element of Russian, life being restricted, whether you agree with it or not. The knock-on effects were real and seemingly ignored by those making the decisions and not really taking care of the counterparty risks that are associated with that. But the market understands them and started to react to them quickly as things began to break down. Once you turned all of those collateral assets and made them worthless overnight, you left people exposed, and you had a lot of people get margined out and various things. And that's why we've spent days going over the potentials of what was going to happen, and whether it's policy error or not, or intentional. Two different things. I mean, you certainly could have alleviated the oil restrictions by allowing U.S. production to resume. They said absolutely not. They started going around begging other countries and then threatening other ones that would do business with Russia, but those still aren't going to satisfy the energy needs of the world. And as I was pointing out, the Eurozone would be the first marker of us seeing that collapse, and the euro continued its decline. Gold continued its rise. Well, we'll just go ahead and take a look. NASDAQ, from its standpoint, nearly reaching the 0% there. We would expect that it gets there, unless that orange can dip down a little bit further to give it some support, but that's still in weakness mode. And you're reaching a point, though, where you get to an extreme fear that counterparty trade says, hey, any positive news can lift this dramatically, which was kind of what happened early on intraday, when all of a sudden the Russians said that they would just stop if certain terms were met, and that led to a lot of positive excitement, but it was immediately rejected. Whether you think that was reasonable or not, or what the justification is for wanting this to continue, those are separate issues. That's politics, not related to what it's going to do. Of course, oil reaching up to the 130 level, finishing slightly off that, down at the 120, but the damage is already there. And the longer this persists like that, the political pressures in the U.S. and also in the EU are going to grow as prices become unaffordable. Of course, you saw commodities, wheat, those things limit up, and for good reason, because a big portion of the breadbasket production for a lot of North Africa, and that comes from Ukraine. Obviously, Russia's not going to be exporting anything, and at any point, Russia can just say, hey, I want a settlement in gold. And what happens then? They've just kicked off the London bourse for handling gold bars and things like that, but they really don't necessarily deal in the physical as metal as much as doing paper transactions with metal. And so what happens if oil is having to be settled in actual gold? I don't even know if they've taken that one into account, because Europe can't afford to turn off the spigot. Germany's already seeing shortages from various companies. You had Shell actually having to buy Russian oil and apologizing for it because you can't meet their contract demands without it. And it's just some basic elemental stuff that just was not taken into account, or if it was, they didn't care because they don't mind, from a green initiative standpoint, having oil prices move towards 150, 200, because, well, then it does make alternative energies just cheap enough to be justifiable. But the carnage to average working class individuals is going to be tough to comprehend doing that. There you see gold over 2,000, and that's still pretty conservative. It could go a lot higher than that, so it's still being held up. And that's the collapse in the euro. Pretty clean No way about it. 108, still they held it up pretty well because we were down, almost broke into the 107. But like I was mentioning before, that was a danger zone. And of course, they bought it right at that key point because I said below 108, ooh, they get some systematic problems. And like I said, too, as you get down below 104, then it becomes impossible to determine how far the collapse takes place. And this is just a recognition that the Eurozone is in serious trouble, if not bankrupt. The only one that can save it really is the Fed, and that's just by giving them. They did the same thing in 2008. Nobody really talks about the trillions that were given to Europe to keep it solvent, but they're clearly not. And how you restructure that. I mean, they can potentially underwrite the extra costs for clients, I guess, is a potential that they'll probably have to talk about. Giving each of the countries money to help subsidize the added cost of fuel in that in the short term. But that only works if you think it's a short-term situation as opposed to, endemic or systemic, where it's just going to snowball. And that by no means is determined, and that is the uncertainty that exists. Rates for treasuries started rising. There was a little mix back and forth in the market because as things rose, people were taking the safety off and buying, but once it started fading again, a little bit of that reduction. Of course, Bitcoin, everyone was expecting that thing to spike because of inflation. Sorry, was partially used as a hedge way back below, but as we talked, it became a speculative yield of parking money in between risk on, risk off. And risk off is still sold. So it's sold like any other risk off asset would, as opposed to an inflationary hedge, which you saw gold actually respond in. Really not even that strong relative to the amount of inflation that you're seeing, because this transitions to, as we talked about before, with the fertilizer issue, with Russia being a primary component, and whether or not that's going to affect growing seasons going forward and the cost of crops, and what that will do to eventual food prices. Coupled with oil. I mean, you're talking massive increase on top of massive increase. And who's going to bear that? It just is a crazy situation. ETH is just a beautiful, from a 5K standpoint, just fade. I mean, you have the same buy as the ES. Has behaved exactly like the market and sold off exactly like the market. It was absolutely perfect. And here it is for a 50K. Ugly, ugly, ugly. All beautiful with the MBI white leading. So did exactly as the pink bar described. No issues with that whatsoever. Here was the gap down that started early in the Hong Kong Open. Tried to make some pushes back, but continued to make new lows. And dipping all the way down to that 42.38 range. And then it caught a bid. And like I was mentioning, they were going to bring it all the way back up to that close right from the end of Friday, and that's exactly where they brought it. I was posted early before the rally even began, that we were looking at that 43.30 range, 20 somewhere in there. And I forgot I put it on the Skype chat, and we got exactly back up to it and held up for a little bit. And as soon as the market really began to fade, then it's just a long stretch of, can I sell more? Keep adding to the short, keep adding to the short. Every little pop, every little pivot of the magenta down, able to attack, boom, 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 and it didn't stop. So pretty straightforward. This was all too easy to see. It's a shame that others, it was completely avoidable too. All of this has been avoidable. Now with the market decline, necessarily not so much because of its overvalue, but we can debate those issues. But the reality is there's still plenty of counterparty risk that exists out there, and we haven't even got to the serious liquidity strangleholds that potentially lie out there, and any one change, both positive and negative, can have serious rally potential. So something working out to a positive resolution could affect it, but also Russia making one of those demands for settlement, and that could create even more turmoil. So enjoy that. We're going to see it because it's not that hard for us to follow what the money's doing because we're going to see it right from the readings. As always, though, trade well, and we'll talk to you later.